All right, on to our next topic. We finished our sales journal entries. Now we're going to discuss different freight methods. So we're talking about buying inventory and selling inventory. Now the inventory that we're buying doesn't just magically appear, right? It usually has to be brought over. Oh gosh, I'm better at drawing. Let's see. Right? It has to be brought over. So the supplier puts all of our orders, our packages on this delivery truck, and the delivery truck brings it to our place of business. Right? And so that time, that gas, that all represents costs. And we know if there's costs that are being paid, it needs to be recorded in a journal entry. So now we're going to talk about those freight costs. All right. Well, first we have to find out who is paying the freight costs. Only one of the parties is going to do the journal entry, right? Unless the shipping costs are split or something like that. But most of the time it's borne by one or the other, one party or the other. So the first thing we have to do is decipher who's paying for the shipping costs, and then we'll talk about the journal entry that goes along to record it. All right, so shipping terms. Okay, so when we have a purchase or a sale, there's going to be an invoice to accompany it, especially if it's a credit sale. And that invoice should contain many things, right? The price, the shipping terms, the credit terms, right? The parties involved, et cetera, et cetera. So we're interested in those shipping terms. So in this class, we're going to see shipping terms that are either going to be FOB destination or FOB shipping point. Okay, so FOB stands for free on board. FOB. Okay, so that means that that inventory is going to travel on the carrier for free until a certain point, right? So destination, that's wherever the consumer picks. The consumer picks the destination and the seller pays for those shipping costs. You can probably guess if it's FOB shipping point, if those are your shipping terms, the buyer pays. Seller gets to pick how far it rides. Maybe it's just his back door, and then the buyer has to pay for all the transportation costs to get it to their preferred location. Okay, so memorize these terms. It's not going to change. So that way you get really quick if you see in a word problem or on an invoice, FOB destination, you say, oh, seller pays. Seller's going to do the journal entry. Okay. All right, so now we know who will be paying. Okay. So we've answered our who question. We just have to look at the shipping terms. Look at the terms. So once we've decided which party is going to pay, now we know who has to make the journal entry. So let's look at the journal entries involved. All right. So let's look at seller and buyer. So let's say the buyer is paying. So if the buyer pays, then the terms must have been FOB shipping point. That's the case. The journal entry that they're going to make is going to be a debit to inventory. I know it's odd. And generally, freight costs are paid with cash and not on account. Okay, so if they don't tell you, assume cash. To record freight in costs on inventory purchase. All right. And I know it seems odd that we're increasing inventory, okay? It has to do with a couple things. One is that we're using perpetual method. So this is the journal entry for the perpetual inventory method. It would be different if we were using periodic. So that's one thing. And the other thing is FASB tells us that we should increase inventory, make sure that inventory balance reflects all costs to purchase the inventory and ready that inventory for sale. Okay. So that's why in the past, we increased inventory for the purchase price. But we have to make sure that that inventory is not still at our supplier. Otherwise, when our customers come in and they don't see any inventory on the shelf, they're going to be sad. So in order to get that inventory ready for sale, we're going to have to pay for all those shipping costs and record it to the inventory account. All right, now let's look at FOB destination. So if the terms of our sale are FOB destination, that means the seller is going to pay. If they're paying, they have to do the journal entry on their books. And that journal entry is going to look a little different. It's going to be shipping expense. Shipping expense, and again, assume cash. To record. Rates. Helped costs. Sale. Okay, so yes, this is a new account, shipping expense, and they might use other, terms like maybe delivery expense, transportation costs. I usually call it transportation out. Okay. Those are other names you might hear for an account, but it's going to be an expense account. Expense account. It's going to appear on the income statement. All right. So now you have learned about freight costs, how to determine who pays for them, and how it's recorded. All right, good job.